Last time we spoke, we still saw a sort of a dire situation that was playing out in the banking space with hope that things would get better. It seems that the investment banking space is still doing far better, while the retail banking space is still under pressure at this point.
Absolutely. Good afternoon. What we've been seeing from last quarter to this was that although investment banking has picked up quite significantly and across all product classes, retail banking has pulled back quite aggressively over the last quarter. So although the overall index remains at similar levels to the previous quarter, it's quite a different picture if you look at retail versus investment banking.
It's fascinating because it is sitting at an all-time low. With regards to the retail banking space. Why is that? Because we're seeing a healthier consumer, retail sales is picking up. What can we read into this with regards to the South African consumer at this space? Because at this point, because it's not feeding through into the banking sector.
During the course of last year, we started to see that levels of bad debts started to improve. In the first quarter of this year, there was a significant pickup in the bad debts levels. That coincides with cost pressures still remaining quite real for the retail banking segment specifically, and also at the top end, the revenue line also remaining under pressure in both the interest and non-interest income levels.
With regards to credit impairments, it still seems that is sort of the nagging worry. For banks. A lot of the investors that we chat to on a day-to-day basis say that we shouldn't expect anything amazing from the banking sector for this year and into next year. Is this really going to be in this negative space that the consumer's in? Is that going to perhaps contribute to the overall negativity in the banking sector?
I suppose if you look at some of the economic indicators that has been coming out, it is definitely appearing more positive. So you would hope that we've been hoping to see it filtering through to the retail banking sector. In the first quarter, we saw that significant pickup in the bad debts, and I suppose it could be because of the last quarter of last year, the Christmas season, etc., that's filtering through. So we have to see how that progresses during the year. But I suppose as long as there remains the pressure on the top line, where credit growth still remains very slow, despite, as you say, the consumer appearing to be at better levels because of the low interest rate environment, but also the costs remain high.
Exactly, and you mentioned the credit growth scenario, and it seems that the loan portfolio for banks with regards to home loans still relatively slow, and that really is also depicted what we see in the property sector in the country. So it's basically broad-based.
Exactly, because on the property sector we haven't seen any real growth. If you consider most of the banks' exposure to the mortgage books are quite a significant portion of their total advances, and I suppose they have to consider the underlying economic environment in which they lend into.
A positive trend that we have seen with regards to the investment banking confidence space, where we saw the number moving from 42 points in the fourth quarter to 55 in the first quarter. Can we attribute some of the strength to the excess liquidity that we've seen, to markets doing quite well, and this is what's boosting investment banking?
Yes, and the interest in emerging markets, transaction flows, as I mentioned, is in all segments of investment banking that we have seen an improvement, where in the past it was in one or two specific areas, and that has been consistent over the last 2 quarters that we have seen that pick up, and exactly as you say, it is because of that international trade flows that are starting to pick up.
So it's amazing how we've seen the reversal in trend, where we saw retail banking doing relatively well, and now that has been reversed. When do you think we can see both sectors on a stable path to recovery?
I suppose if interest rates remain low, the consumer moves through, and affordability of credit becomes easier. I suppose we took a look at the underlying economic indicators like the property sector, etc., as that improves. I suppose the one unclear is the regulatory environment and the potential
and Basel
impact.
III, of course.
Absolutely, and how that's going to play out over the next couple of years.
Once we do see clarity on that, is that then going to prompt overall sentiments in the banking sector to recover extensively?
I would have thought so. You know, we talked about and I think we've seen in the last year the dependence of the South African market on international trends. Last year we had the Portuguese and Greek crisis, and we saw that impact come through into our own confidence levels and index. And I suppose it's very dependent on what happens internationally in the year going forward.
If we do see the removal of quantitative easing or quantitative easing 2 and we don't see quantitative easing 3 coming to the fore, what impact is that going to have on the investment banking space?
I suppose for the banking sector as a whole, as inflation comes through and interest rates have to increase, it will have a negative impact on the banking or the banking index as a whole. And investment banking specifically, it will have a direct impact on trade flows and transaction volumes.